This is Justin Pulitzer. This is my weekend review for March 29th, 2015. Happy Palm Sunday. Let's jump right in. There's a lot to cover. So we have a holiday shortened week next week. Friday the market will be closed. And the expected move as priced by the options for the expirations, we have a quarterly, which is 2 days to expiration. That's a $2.10 expected move. The 4-day to expiration, which would take you through the week's end, is about $2.98, so about $3, let's say. And for the 19 DTE, which is the April expiration, the expected move is just under $6. So keep those expected moves in mind when we go through the SPY chart now. So let's take a look. We've been in a long, protracted uptrend for quite some time. Moves on the other side have been unsustainable, and we've had a channel trend that has held. And we are now currently inside of an uptrend that is inside of an up channel, although we are starting here to break slightly. And I'm going to zoom us into more current time. And this is SPY. And as you can see, the 100-day moving average had been some strong support down here. We bounced just ahead of it. Down here we came in again. We had a strong reaction up. This was the Fed day, and we are now coming back down. We knifed through the 50-day moving average pretty strongly on Wednesday. We broke below the, I would say, the range, this sort of, you can see we had this big consolidation range. That range high I had identified as 206.42, and we have now come down, tested below it, tried to get back up to it, rejected a little bit, and then on Friday we had a bit of a bounce. We closed just below that trend. We are still below the 206.42 and the 100 MA. But we are above the real key here. You can see this is sort of not as much volume traded here. I wouldn't say volume, but price traded here. And the absolute, I would say, limit for this range here, I like to think about distributions, and that is 205.38, which we did close above. You can see we sort of looked below there, failed, came back up, and we closed just shy of this trend and the 100-day moving average. And we've been sort of forming this downtrend. I drew in a down channel, and you can see that the terminus of this down channel is roughly at the 61.8 Fibonacci retracement of this big range that we've been in here. So we've roughly been holding around the 50%, and the 61.8 is just below. So there are some pretty key things to take away from this. One is that I believe that the market, in terms of the S&P, is still vulnerable to a move lower as long as we stay below this 206.42 to the 50-day moving average. If we can get back above there, I would say we're a little bit on more firm ground, but still a little bit shaky as long as we are below this 208.97, which was this old range high here that we sort of popped up above, held here on the pullback, came back down through, and roughly this has been a very key area. That to me is really the upper distribution for higher prices. That distribution begins at 207.84. So anything above there, I think, is considered the upper distribution. Anything below this 207.84, between that and the 205.38, to me is the middle distribution. And below the 205.38 down to this 201.90, which is roughly this gap fill, is starting to be the lower distribution. And you can see there's a little bit of play down there to the 20-day moving average. Anything below there, I think, is starting to get a little bit iffy because you can see this big volume separation here. I believe that if we do have weakness next week and we take out these lows again, you can see we sort of looked below them a little bit on Thursday. I think that the channel low and the 61.8 will come into play. That's around 203.36. But the really key level to me then would be if we did come down to this 201.90, somewhere between there and the 200-day moving average. And I would say that there is possibly a little bit of give there to this 200. But let's go back and discuss the expected move, which was $3. So let's just, for the interest of quick math, say that this is 206. If you took away the $3, that takes you to around to 203, which is close enough to this 202. I'd say that number would beef up a little bit if we come down, because the VIX would spike, and that would make the range, the expected range of the market to increase. So I would say that would roughly coincide with this 202 area. If we come back up, VIX might decrease, and we'll probably expect that range to be true or compress, and that would take us roughly, look up to that 209, which is roughly close enough for government work, quote unquote, to 208.97. So we are going to be expecting to see either the range sort of high or the range low this week. The tell to me is going to come if we can come up over this trend. And there are some other factors that I would say make the bull case a little bit possible here. I know there's a lot of fear whenever the market comes down. The fear mongers come on TV and make everyone nervous. I happen to actually be in the camp that lower is potentially possible. I thought that these bounces here were a little bit weak, but I would say all hope isn't lost, particularly when you look at some of the other indexes, like the IWM, for instance. You can see this did also have a very big move down. It took out multiple days, very big engulfing pattern, but what didn't it do? It didn't take out the old high, the breakout area with 120.97. We are still well above there, and we are also still well above the 50-day moving average, which roughly coincides with there. I could easily see the case if there is some weakness early next week about retesting that, possibly a little bit of an overshoot to the channel low, which isn't all of that much lower. And you can roughly see that is still above the really key breakout range of the 119.39. This, to me, this area, if there is weakness, is going to be the absolute tell and key for the market. If we lose this channel, I would say that the chances are that we are going to go lower and probably retest into that 117.37. I really wish I could stop talking about this. I've had to talk about this level for like 2 years, practically. I haven't only been doing the videos for 6 months, but I've been talking about this level in my trading on Twitter and with family and friends, so to speak, for quite some time. And there's some other trend support down there, but we'll cross that bridge when we get to it. The point of this to show you is that the IWM is still exhibiting relative strength, no matter what people say, as long as we are above this 120.97. And I would say that this area here is going to kind of be the make or break. Above there, I'd say that the bulls still have more of a case. Below there, it starts getting a little bit more iffy. Take a look at the Qs, also showing a little bit more weakness here. You can see we made a lower high here, and we are now making a lower low. And it did hold the trend. It's still above the trend, which the SPY kind of lost a little bit. And it is roughly holding still over the breakout level, although be at the lower part of that range, which is 104.58. The high part of that is 105.26. And we did close over that 526 here. It was just basically on the 50-day moving average. For me, if we can start getting the Qs back over 106.25, I would say it's starting to heal a little bit, because that is, you can see where the volume distribution picks up, gets us up above this big distribution here and puts us into the upper distribution. So that, to me, this area here, and it roughly coincides with that we had a downtrend, we looked above it, we came below. This actually isn't so relevant anymore. I'm going to delete this. I think it's a little confusing. But you can see this 50-day area and the 100-day area also was really relevant for the Qs. Anything below there, I think we're going to be coming back down, possibly significantly lower, and to retest this 101.75 area. I'm going to discuss a little bit. There are some other levels in between there, but the relevant range here is if we start getting below the 104.58 and we start taking out this low, which is the 104.24, anywhere between there, then I think that the market has significantly more weakness, and we may want to test the backside of this prior downtrend line. And possibly find some support there. Think about this Qs chart when I discuss Apple, and I'm going to do that in a couple of minutes. Another tell, something to be on the lookout for next week, is the VIX. There was a key level here of this 1719, and you can see on Thursday we got right there to the tick, 1719. This tells me the markets are still in responsive mode. There's not initiative selling. I don't want to get too much into that. That just basically means the bigger money piling on, although this week the market on close, which I've discussed, is the imbalance between buy and sell orders, was basically every single day on the sell side, which to me was probably some more institutional selling. We'll discuss that in a little bit, but I think that this area here is key. If we take out the 117.19 now from a higher low, you can see here we made a lower low. If we now start making higher highs, then I would say that the VIX has potential for getting to this downtrend, which is close to 20. It's currently 19-ish. There are some other important levels that I've discussed in the past with VIX. 1757 to 1785. That's sort of the buffer zone between bullish and bearish. Anything above there, the market usually tends to start looking more bearish and sort of more panicky type selling. Below there, it's sort of more responsive action where it's this back and forth between buyers and sellers. So that to me is an absolute must. You can see I have an alert set here. I encourage you guys to do the same. If we start getting IV up above there, it probably means the market is coming down, quite frankly. If we can stay below there, I would say the bulls have more of a shot for higher. TLT. As you can see, TLT is coming back up, and there was a really long channel in TLT. Let me take a look on the 20-year monthly. It's kind of cray how far we have to go out with this thing, right, to show you what I'm talking about. But you can see there's a pretty defined channel in this. This was the 2009 peak in the financial crisis crash, and you can see here we came up, we looked above, we couldn't sustain. Same thing here again. We came down below, but we are actually, as you can see here, we held roughly around that area. As long as this instrument, the TLT, and I'm going to bring us back now into modern times so you know the levels, as long as we are above that area, I would say that the fear of higher interest rates is a little bit quelled. It's not as much on the table. If we start getting below there, then I think you have to start worrying more about rate hikes. This to me tells me that the market isn't as concerned just yet. The key levels in this to stay above, if you're a bond bull, are 127.60, obviously 132.22 if you can get back above there. We can see we made a peak here, we came back down, we pinged this level, now came back up, made a lower high, and we're rolling back over a bit, but kind of not really, just holding in around this 50-day moving average. I'm in the camp that rates will eventually go higher. I just don't know how long it's going to take, and I think as long as there's fear of a correction in the market, rates will probably stay rather tame. I think that Yellen had some comments on Friday that I thought were hawkish. I think the TV talking heads perceived them as dovish, but we'll see what happens. I'm curious to see the GDP numbers have been coming in a bit. The estimates have been coming lower. If that happens, earnings estimates have to come lower. There'll probably be layoffs again, and then we start this whole cycle again. To me, my interpretation of this is that the Fed, given the data that we've seen, should be more interested in lowering rates than raising them. But you never know with this slap-happy group over there. Anyhow, let me show you one more thing with regard to rates, XLU. I had discussed last week this area being key to hold. We did hold it. We came back up. Now we are coming back down to retest it. If this area gives, and I'm not saying whether it will or it won't, it is potentially possible we have some type of a double bottom and we have a reversal back higher to retest the highs. But if this does break, careful, I think that we would be coming down to the primary channel and also the 61.8, where I think it would be an absolute screaming buy, at the very least to sell puts, just a little bit below that 40, somewhere between the breakout area of 41.44 and 39.97. I'm going to show you this on a longer term chart. Let's just do, I think we can get away with just going back 3 years. Let's see, 3 years, and Now let's do daily, right? Let's see. Hold on. Yeah, you can see that this has also been in a channel. This was the breakout high, so I think that XLU somewhere between this 41.44 and the channel low, which roughly coincides with the 61.8, this area, I think this would be an absolute screaming buy if this does something like break and come down here. And the sharper the price action, in my opinion, the harder it comes down. Like if it does this in just a few days, the better buy it would be. If it does something like grind and like, you know, take a really long time to come down, then it gets a little bit more iffy. But I do think that that area would be a buy for me with regard to XLU. IBB, not IBBB, just IBB. This has been in the news a lot lately. There's been a lot of talking heads. You can see it's been in a long-term up channel. I artificially drew the top, but I had discussed this last week that this to me was the, I discussed this actually in last Sunday's video. I thought that we were seeing a bit of a top, a blow-off top, and we have since come down. I'm just going to bring us into more modern times. And I had discussed that we were in sort of an up channel within an up channel. I expected this to come down here to bounce. It has. The real danger now, if you're a biotech bull, is the prospect of a lower high and then taking out these lows and potentially coming back down to test the channel low around this like 285-ish area. The breakout you can see was 274.40, so there is potentially a lot of room lower with these. With this, there's, I know, a lot of momentum in here. There are levels in between here that are support levels like 305 and then down here at 292. But if this low and the 50 give, I'd be looking for a move to that 100 pretty quickly and potentially lower depending on how the market goes. Just be a little bit careful with this. You can see Biogen was also one of the ones that really led this charge. I'm going to just show you, this is an exhaustion gap. You can see it had been in this consolidation phase. It had a gap up on earnings, and it was just in this slow grind within the channel up. You can see we were stalling here. Here was news. Took the price up huge on high volume. That is what all of these people who were the quote-unquote smarter money were waiting for, and they took the opportunity and they sold the bejesus out of it. It is now on the uptrend within the former up channel. Really make or break level. If you lose this low, this 420, I would say the 50-day is probably on deck. There was a level back here, this 412.58, which was the 1.618 fib extension, so you can see just how extended this really was. I'd be looking to do some type of a row buy somewhere down near this earnings gap area and this 50% fib, which is 385. I think this area would be a good area for support for a right or right out type of a play. If that is wrong and that fails, the real strong support to me would be around the breakout, somewhere between 349 and the 61.8 fib, which is 363. I would be interested in selling out of the money puts in that range. Particularly the closer to 349, the better. I think that area will hold. I think you could make some nice bank on it. Again, the steeper this comes down, the sharper the better. If it does something like grind, it starts getting a little bit iffy, and also the steeper it comes down, the IV will get boosted up. I expect this to do something potentially like bounce and make some type of a lower high and then maybe roll over. It's also potentially possible we do come back to test the highs if the market firms up. But for me, I'd be more interested in that, in this Biogen, somewhere down here between that 363 and the 349 if you want. You could sell some out of the money puts. Don't go too long in terms of your date. I think those will eventually work. Apple, the apple of my eye, right? So I've discussed this in quite a lot of depth in interviews and videos, and let's just do it one more time. You can see Apple here made, got my 128.97 fib extension. It blew through it actually. It made a little bit of a higher high on momentum. Came back down and kind of didn't test where I wanted it to test. I think that Apple would be in a lot more firm position now if it would have been a good girl, so to speak, and came back down and tested this 119.75, which was really the breakout. If it would have done that, I think that it would be launching from a stronger support. It did not. It launched from a weaker support, and it now has come up. It retested in this 129 area. Again, it has failed, and we are coming back down. On Thursday, it bounced off the 50-day moving average, but Friday, it sort of rolled over a little bit again. If you lose this low here, and you can see I drew in a bit of an artificial down channel with Apple, I do think we will come back down and retest that 119.75. However, this low isn't that far from here, and I'm not so sure that it would hold. I think that it could potentially do something like come down and retest one of these channel lows. Those lows are roughly around 115 and around I guess it would be 112-ish if it happened, but I expect that to move up. It's not going to be an easy, clean shot, although it is potentially possible given some of the crazy price action Apple has exhibited in the past, like this type of flash crash day. So, and you can see, by the way, the flash crash close was 115. Oddly enough, look where that coincides with the channel low. I've been playing this with put ratios. I've discussed them on the stream. I think that anything with 110 is your lower strike, which is roughly the gap fill. You can see this was 109. Also, it's the 61.8 fib retracement of this entire move from all the way down here to all the way up here. I think that Apple, by the way, is something that responds very well to technicals. I think this area will be very strong support, at least in the beginning. It should be a good spot to sell out of the money puts. Like if we come down here, you can sell sub 110 puts. Those will do very well. So that is how I'm playing Apple. I have a near dated put ratio on. I don't want to really discuss it in the video for next week, but that is playing for a little bit lower. If Apple does take out this level, this is now the key level, the 129.85. This was the day that Apple was added into the Dow Jones Industrial Average. That was the pre-market high it made during that day. If you can get above the 129s and clear at the 130, like let's just say 130, I think that stock has a potential to not only retest the old high, but make newer highs. I had drawn this here. It's no longer relevant. But if we do clear there, I think that there is some room, and that would take the stock into the 140s. I will discuss that in very big detail if it happens. For me, the best play would be for Apple to stay weak and use up a lot of the selling time and pressure into the earnings and do something like this and come down and set up great for a long. If it's strong into the number, it's going to be a little bit more iffy. If it's weak into the number, it will set up for a long because it will have washed out all of the weak hand chasers and people will be terrified. That's what I love to see. Amazon. This one is in a bit of an iffy situation. I had discussed that I think, and I do still think, it could retest this 408 area, which was the old high. It has now starting to make lower highs and coming back into here. To me, the setup is that this would be a very hard chase, and I discussed this, that if you were still long, you might want to put on some protection and play for the higher level. It's not too late. We are now coming and retesting this area. I could easily see Amazon doing something like coming back in and testing the 50. For me, what would really be the more interesting play, truth be told, is if we came back down here into like this volume distribution. You can see this is where the volume picks up. It's also the 50% fib. It's right around where the gap is. And I think that area between 337 and 341 would be an excellent place to sell out of the money puts. Somewhere around like 325 or maybe the lower 300s, like 309, 310 strikes. That's also the gap fill area. Noticing a bit of a trend here in my thinking. I think that selling out of the money puts here on some type of a sharp move lower would work, and that is how I would play Amazon. If it does wind up coming back up and you take out this high, these aren't really significantly excess highs. If you could take out that 389.37, then I think the play is to 408, and it should do it in pretty short order. BABA. This thing is just an absolute abomination, right? How this thing is trading. I've tried playing this both long and short, and I made a lot of money on it a while back. I wouldn't say a lot, but I did okay in it. Now I've sort of just been, teasing it on and off. I'm currently long the stock, and I have a put spread on as my hedge. I've been looking for it to come back up and retest I originally had talked about 90. The 50-day moving average, which is now down to 88.37. So I think that we could see something on, if there's some news, to come up and retest that 50 MA and maybe this volume distribution up at 90. You could also see that was the IPO day low, which was 89.95. For me, my trade would be over there. It is also potentially possible that with some Momo that BABA could come back up and retest a little bit higher. up into like the 97s. That's really where the next volume distribution starts picking up. It could fill up this void a little bit and start filling up the gap. I think that's going to eventually happen. It's been hard to really play, but we'll see how that goes. I do think BABA, the destiny of the stock is to retest higher. However, the caveat is if you lose these lows here, there is no reference support other than where the IPO came public before, or in the primary market before the secondary market, which just means where it was trading before it went public. If you go below there, there is no reference until that like 66-ish area. I do think that would be very possible if this gives out. I don't necessarily know that this would give out. My current thesis is that it will not give out. If it does, though, you know me. I am very flexible and very fluid. Drop of the hat, I will be flip my long to short, and we will be rock and roll for lower. If we can take out these highs, this 87.04 off of a higher low, I will be adding long for a move higher. I may just add long anyway if we can show some strength the next couple days. I have liked how this stock is held in this week, considering the market weakness. It's just been sort of building its base. So that is BABA. Another Chinese stock a lot of you like me to talk about is Baidu. This is sort of getting to be, I had discussed this was in a down channel within an up channel. We are now really testing it multiple times. If this gives, the stock is going to probably come down lower to that 191. That was actually the earnings gap low in after hours. It never saw that during the regular trading hours. If this snaps, we will fill up, I think, down to there, somewhere between this 194 and the 191. It may even be lower, but you can roughly see that coincides with the low of the down channel. We would now be out of an up channel into a downtrend, but I do think that area would support, at least for some type of a throwback to the like roughly breakdown area, which would be somewhere between this 202 and, let's just say 202 and maybe a little bit higher up to the 20 MA, somewhere between there and 209. So I would be looking for that. The alternative would be to confirm this held and to take out this swing high here of the 218.57 and break the downtrend. If we can do that, or I should say the down channel within the up channel, if we can do that, then I think the path of least resistance for the stock is significantly higher. You can see this was the breakdown area. We tested here, we tested it again. A third time could be the charm, and the third time would also, with compressed frequency, would be over the 200 MA, the downtrend, and we could fly. You can see there's a lot of volume here, and that's why the stock has been under pressure. So I really want to see this get taken out for me for long on a momentum play for higher, or a buy down by the channel low for a bounce. That is Baidu. Really keep it simple. eBay. I am bullish on this stock longer term. I know there's a lot of hate. You had a Gene Munster downgrade. It stopped just ahead of the 50-day moving average. It bounced now to a lower high. It's just in a chop zone. However, anything above this 57.05 I conceive is bullish. Anything above 59.70 to 60 is opening the door to higher prices, possibly significantly higher prices like in the upper channel high. And guess what? A 1.618 fib extension up at 64.07, which would be kind of convenient if it happened over here, or maybe over here on earnings. It could maybe overshoot a little bit. I do think that that is possible. I know Carl Icahn's in the stock. There's some other big gun hedge fund managers who are playing it long. Me, I would love for this to be weak into the number or just chop and consolidate here, which would work off a little bit of the excess. You could see some of the stochastics are rolling over. I think that this stock anywhere in the between 55.74 and 52.5 in this area, I think is a long. I don't know if we're going to see that 52.5 again. I do think that this area here on the channel low would be a buy. That is eBay. Facebook broke out. We got my 1.618 fib extension up at 185.71. We actually overshot a little bit. I had said that the potential was to overshoot to this area. We didn't get there. We backed off. We have held this 82.17. Anything below there, I think, puts potentially a move just to retest 80 back into play. So I can conceivably easily see that happening. You can see that's roughly where this breakout took place. However, anything over here still has all-time highs in play. And I do consider this still all-time highs because we're over the 82. I know there's a lot of concern that's going to build up over Facebook into the number. I actually think the better move would be some type of consolidation or some weakness just to shake out some of the chasers. This was a very steep move, multiple days up. You can see we held the 50 here, another test of the 50, gapped again, and then it was a gap and go for multiple days. I just think it's working off some of the steam. I eventually think this stock, and I know I've discussed this before with you guys, and for some reason my channel isn't showing here, but I think the stock can eventually work its way to 100, maybe even higher. I don't really, for some reason, have that on the chart here, but I've gone over that thesis before. If you look back into some of my other Facebook videos, you'll see it. Twitter, innovating. They launched this Periscope thing that is sort of a meerkat competitor that's baked into Twitter. They will be the winners because they are the in-house people. So Meerkat, just don't. I don't know. I'm into the. I'm gonna actually do a Periscope Q&A this week. I have to get myself an iPhone tripod and a microphone so that the sound isn't garbled. But be sure to follow me on Periscope. That will be happening. Anyhow, you can see Twitter broke the downtrend. It broke 50. It got roughly up to 51.87, really 152 is really where some of the resistance is, and it's just consolidating and backing off a little. As long as we're over 50 and above this down channel, I think the downtrend, I think the stock has potential for going higher. If there is a pullback, let's just look at the fibs. This area, this 43.97 and 42 area, I think would be support. If they really stink up the joint, and this is terrible, we're going to come back down here to the 37-38 area and retest mid this breakout range, and that would roughly be with the uptrend. It's a little early for me to make my call on Twitter how I'm going to play it into earnings. I sort of have a convoluted position on currently. I'm short puts and also long put ratios. So my bias currently is long, but it's sort of long chicken hawk style. So I do think that if Twitter is good on earnings, they are going to come back up and fill up the triangle to the to the channel high, which is roughly about 60. I'll show you on a longer dated chart why I also think that that area might wind up being some type of resistance. You can see the before it gapped, the gap down, it was 65.97, but the high that it responded to here was 58.95-ish. If you go across here where that roughly coincides with, it's close to the channel high. That is the target. If you get back up there, just don't be greedy, book some profits. I do think that Twitter eventually can see new all-time highs, but they've really got a lot to prove, and the stock currently is mid-channel. I do think that the path of least resistance is probably higher, although if, like I said, if the tape gets a little squirrely or if they kind of muff it again on their earnings, that management team is nowhere near as good as the Facebook management. We could be coming back down and testing 50% and 61.8 fibs. If they really blow it, the channel low. I would say that the odds here are favoring higher just because we broke the downtrend and we're into some area, but there is some resistance and some price memory up here. We are in a responsive market. Would not shock me to see a pullback. Keep that in mind. I've always maintained the easier way to play Twitter is not with shares, it's with short puts, which you sell into weakness, not chasing strength. That is it. Gilead. They had a pre-announcement. They've had downgrades. They've had upgrades. Just caught in this wedge. One of these days we're going to break either higher to fill up the gap to 108 or break down lower, probably down to the first and foremost down to 95 and potentially lower to the channel low, which I would love to see because it would be a screaming buy. It would also be close to the breakout area, which was 84.40. So anywhere down here I think is a buy the dips type of a scenario. If we do wind up breaking out up over this Wednesday high, which was 103, then I would say that the next stop is probably 105.75 and then maybe 108.45 to fill that gap. That should eventually happen. I don't know which order that's going to take in, but we don't care. We just follow the Qs and price action. And by Qs, I don't necessarily mean the QQQ. I mean the Qs of price. Over this high, we go higher. Below this low, we go lower. Very simple. Google. What a choppy... Insert expletive. I played this long. I went on vacation. I discussed taking profits in it here. It's come back down. The key level really for the Google to stay over is this 553 and 545.41, which is the breakout area. It's also the 50-day moving average down here. We roughly have been playing games around the 200. I think the best play is if it comes down here, you buy it for right or right out long, and you play for the bounce. We've now retested into this close to 580 area. I'm going to show you. This was the breakdown area. There's a lot of people who are very happy to get their money back, and they are doing it. So a retake of this double high, let's say 583.20, I think the stock will go higher, probably into the 600s. If we break this area, the 545, which is trend, then I think that we could potentially come lower back down to this 526 or 525 area. There was a gap to fill down here at 513. If we do wind up breaking and coming lower, that to me would be the next stop and the next area to buy. However, we have been making higher highs. Here was a little bit of a lower high, a little bit of caution. I like this area, the 50-day, as a right or right out play, or on momentum over these highs for a move higher. That is Google. Priceline. I had discussed an ideal scenario after the earnings that we kind of just chop and then go through. It didn't do the ideal scenario. It doesn't really matter because I don't have really a position on it. But you can see it came back down low. I had said that around the 200 would probably be some type of a right or right out play, and then I discussed on the line. Someone had asked me if I would have done on the stream if I did it. I said no, just because I didn't like that how we came down. We had some consolidation above it for these 2 days. If we would have touched it here this day, I would have absolutely been a buyer. But we had some chop. It knifed through it, had a little bit of a responsive move higher. We now have a lower high and a lower low. However, we have a confluence of 150-day moving average here. Also, these highs from the earnings gap. I think that this area is a decent place for right or right out. I don't like that it's a lower low. So what would I do? I would probably either wait for the 61.8 fib to do it in shares, or to sell some out of the money near dated puts lower around this area for a lower entry. This is also roughly the launching point for this move. I think there will be some price responsive action there. However, do keep in mind, if the tape gets weak, we could come down and retest the channel low. I like to buy these stocks when they're momentum. I would say that a move over these highs would be the catalyst for that momentum, and it would go significantly higher. I'll discuss that when it happens, but that is that for now. Tesla. Oddly, I don't have that on my paper, but it is one I want to discuss. You can see that Tesla is a victim of rallying ahead again of where it should, and it hasn't been able to launch. And I think that this is sort of what Apple is going through a little bit in the early throes of. We've now made a new lower low. I don't really consider it super-duper significant because of the way we came down, multiple days. To me, really, this stock could get really squirrely, and by that I mean go lower, if we took out this 177.22. I think between this area is just cautionary. If you want to play like right or right out types of moves for longs, I think that this is one of the spots to do it. It's also a good spot to play right or right out short. If we break this area, preferably you don't want to do it after multiple days. You want to wait for some type of a bounce and then maybe come through it again. If that happens, I do think that Tesla could potentially come lower to roughly about 148 to 150 if it does it quickly, and that is the buy for the channel low for a move back up. Guess what? To 185 to between 177 and 185 for a check back. I, however, like I said with Priceline, love buying these stocks when they are on momentum, and I know that there are people who are short and wrong and people behind me who want to chase. Break of the downtrend, that would be a more stable buy and probably go significantly higher. I didn't touch on it for a couple of weeks. It's not on my paper to discuss. Let's just discuss Netflix quickly, though. We are coming down we broke this wedge, this upper wedge. We've now come down with lower highs, lower lows, although now we're kind of just fumbling around this sort of check back area. I would say that this is actually a good area maybe to be right or right out. You can see we used up a lot of the stochastic momentum. I would do some type of a write or write out against the 50% fib, which is also roughly the gap low. I think that would be really cool for a write or write out type of a long. For me, there is also the potential that we come down to the 61.8, which is roughly around these highs. So I think somewhere between 401 and 381 would be a good spot to play long. And what happened? I lost my cursor here. Unbelievable. So here we go. I do think that this is going to set up what I actually would like to do is some type of a put ratio where I was long, like let's say 400s or 401s and short 2 times the 380s, near dated, like maybe like 7 days to expiration or something, and play that for a move lower and then maybe reverse long for a move higher. If this does wind up bending back up and we come back up, then we miss it. But I do think that that's the better play. Also, if you want to play long, just sell some out of the money puts, maybe like 350 strikes or whatever, somewhere close to the gap fill. I think that would be the easier, quote unquote, chicken hawk way to play it long. Anyhow, that's it. That's my story. I'm sticking to it. Follow me on Twitter. My handle is @JustinPulitzer. Be sure to tune into my Periscope live Q&A. Please tweet me some questions. And that is it. Cheers.